Well, consumer prices remain stubbornly elevated in Nigeria as the February Consumer Price Index, the reading released by the NBS, indicates that headline inflation scaled by 1.8 percentage points to 31.7%, the highest level since April 1996. But how can investors in Nigeria shield their portfolios from rising inflation? Joining us now is Sam Chidoka, MD, CEO, Kairos Capital, joining us from our Abuja studio. Great to have you on the show.
Hi, Ladi. Nice to be here.
Fantastic. So we're seeing inflation keeps rising in Nigeria, even as lending rates have been hiked to bring to tame inflation. But the numbers also show that the rate of increase in February was more than what we saw in January. How are you seeing the recent numbers?
Well, so we've seen that inflation has continued to tick up in Nigeria. So far, we have seen a continuous rise in inflation to a point where we have the highest rate of inflation in about 3 decades now. We haven't had inflation this high. And of course, we can see that food inflation has been a major issue. Today, we have food inflation that is almost at 38%, right? Looking at the CPI. And what has driven this has been also, we've seen the depreciation in the currency. We note that the inflation we have in Nigeria is not necessarily demand-driven, especially on the inflation side, but also supply-driven because we import quite a bit of the things we consume. So we have imported inflation. So we've seen inflation figures continue to rise, and that's not good for our economy as at this point in time.
Inflation tend downwards, with most of our major trading partners at this time, but that doesn't seem to be helping imported inflation at this point.
Sorry, can you repeat that again, please?
Like we've seen, inflation tend downward in the US, in the UK, and even in Ghana, at this time, but that doesn't seem to be playing into the imported inflation for Nigeria.
Yeah, you're correct. It hasn't played out yet because remember, it's also important to state that inflation is a lagging indicator. So what you see as inflation figures in the month of March is the inflation that has happened already in the month of February. We are caught up with so many things. Right now, again, we are in the fasting period for our Muslim brothers and sisters. And usually what happens in this period is that food inflation also begins to tick up because some may not have the strength to go to the farm and farm at this point in time. And then there is demand as well once you get towards Salah and all of that. So that inflation would also be priced in what we have in March. So because inflation is lagging, when you see the effect of inflation in countries that are counterparties and you expect that inflation, that effect to trickle down into Nigeria, it will not be immediate. It's going to take a while. Remember that even the CBN governor himself did say that he expects that by the end of the year, will be nearer 20% in terms of inflation because the idea is that all the decisions being taken, all the actions, monetary policy decision, increasing MPR, to 22.75%, that we'll begin to see the effect of those going forward. Because like I said, inflation is a lagging indicator.
And yeah, you did mention the central bank, MPC, did say inflation will peak at some point, in Nigeria. But looking at food inflation and how it feeds into headline inflation, we've not solved the security issues in most of these food-producing states. Do you see inflation really peaking, in Nigeria?
Well, so the central bank governor, we have to note that he speaks from his position as one who manages the monetary policy using monetary policy tools. But there are other things that are driving inflation in Nigeria. Insecurity is one of the things driving inflation. So if you look around the food belt, when people cannot go to the farm, when you have clashes between herdsmen and farmers, when you have kidnapping on the increase, when you look at the Southeast, when you have sit at home every Monday, all of those things feed into the food inflation that we are seeing. And there is no monetary policy that can control that. So what needs to happen the central bank governor says inflation is going to peak and then start to trend downwards. We all hope that that happens. But monetary policy is not enough. We need to do something about security. On the fiscal side, we need to do something about how the cost of governance. We need to look at how much is government spending on recurrent expenditure and how much is going into capital expenditure that helps to drive the economy and push the economy forward. I dare say that I think we're spending so much on the recurrent side at this point in time, and there needs to be a reduction. So in as much as there is just so much he can do with monetary policies, we need to see security at the front burner, and we need to see the fiscal side of the economy rise up to the occasion as well.
Right, and it's a double whammy at this time, rising inflation and a weaker currency. Even though we're starting to see some stability with the naira at this time, we're seeing the naira's outlook brightening with the likes of Citibank, Goldman Sachs Group, Standard Chartered, saying they expect a 25% rebound for the naira. How do you see this forecast? It's looking like the naira is a buy right now at this point.
Well, so you are right. It's a double whammy. We have issues with the currency, but however, if you check on FMDQ, you will see that there's been some stability in the last week in terms of the currency, and somewhere around 1,600. There was a time in January, just between January and February, we saw a depreciation of about 30% in currency. We had some volatility, and with the naira depreciating almost on a daily basis. In fact, there was a time when it got to an hourly basis when the naira, but now we've seen some form of stability. And you can trace this to some of the decisions that have been taken as well on the monetary policy side. So the issues that we've had with Binance has affected the demand for the greenback. The clampdown on BDCs that we've seen from the central bank as well has helped to bring some stability. And the new rule on how BDCs will be owned and run will hopefully bring some sanity to that whole space. I dare say always that I've hardly been to any country where you go on the streets and trade currency. Usually you will go to an office, a bank, or bureau de change. So we need to curtail all of that. And some of those things that have been done, we're beginning to see the effect in stability of the currency. Now, it's that stability that will now lead to where we see some appreciation concerning the naira and the greenback. And we're hoping that that happens sooner or later, because the biting effect on the economy is so much on the common man.
I've also seen the foreign reserves actually inch up too at this time to about $34 billion more. But I guess the million-dollar question now is, how do you hedge, against this kind of inflation that we see in Nigeria? We're here now, but an investment has to be made, at this point. Or is it better to just sit on your money?
Sitting on your money is no solution, because you have a depreciating currency and inflation is on the uptake. Even if you sit on your money, the purchasing power of that currency may not be able to buy for you tomorrow what it could buy today. So a few things that people have to check. One of the things that we try not to do is to give generic advice as far as portfolio management is concerned, because again, a lot of things go into your portfolio and how you decide to manage your portfolio. Your age is an important factor. The reason why you are saving is an important factor. Your term to retirement is an important factor. So when we put all of this together, it's easier to bring a portfolio for an individual. Portfolios must be individualistic. There are no general portfolios. So what I always advise people is, go to your financial advisor, talk to your stockbroker, talk to your investment banker, and plot a portfolio that works for you. But on a general scale, what are some of the things I can say are this? I think the stock market has done well. Year to date, we've seen over 30% return from the NGX, and that, of course, is nearer to where our inflation figures are, right? So if you have invested in the stock market, say in December 2023, today you would have been able to have some stockpile against inflation. Another thing people have to look at is real estate. In terms of real estate, it's a good store of value, and land never really depreciates. Even if your rental income is not up to par, you're going to get returns based on capital appreciation. But the question people always ask is, how do I get enough money to invest in real estate? One of the things I like to say here is that over time, we're beginning to create products in the split economy where people can split real estate into smaller units and everyone can invest. Also, you've got to look at collectibles. If you have the opportunity and the wherewithal, you can invest in artwork, you can invest in commodities like gold. These are things that help you to hedge against inflation. But having said all this, I'd like to please warn our listeners and our viewers that you need to sit down with your advisor and get a specific portfolio advice that works for you.
Right, and talking about real estate at this time, we've seen how the price of cement has skyrocketed, recently, and definitely that's adding into the cost of building houses at this time. All the inputs are really expensive, at this time. Do you think real estate is still that go-to asset class at this time?
Yeah. It's still a go-to asset class. It depends on what side of the market that you're trading. Remember that in the real estate space, you also have like the retail side of it, and then you have the upscale side of real estate as well. So it depends on what kind of assets you are buying in real estate. It depends on is it a new build? Is it an existing property that you're trying to buy and look for capital appreciation and flip? Are you trying to get rental income? I'm not a fan of rental income because rental income is usually 4 to 5%. Yes, the prices of the commodity, of the things we need to build, especially cement, has been on the increase. But at the end of the day, when you look at the cumulative return, people are still getting 30 to 40% return in the real estate space. Compare that to investing in putting your money in a fixed deposit. You're more likely to get somewhere around between 10 and 12% return. Compare that to the fixed income space. Even with the fact that we've seen a massive increase in yields, so 1 year T-bill, the last auction will give you a 27%, almost a 27% yield, yet that is still sub-inflation. But real estate, people are still making as much as 35 to 40% return trading in real estate who understand it. And again, as I always say, you have to learn to deal with professionals. One of the things I find very interesting in Nigeria is that when people have situations when they need the help of professionals, we always try to advise ourselves. And I counsel against that you need to speak to professionals and know when to invest, how to invest, and where to invest.
Right, and talking about where to invest, what asset class would you say should not be in the portfolio right now if you're trying to beat inflation?
So the first thing I'll say is that money under your pillow, if that was an asset class, you shouldn't do that.
Right.
Because by the time you bring it out, inflation would have wiped all of it. I would say stay far from that. If you are doing any form of savings, people are used to doing what we call, I think in Yoruba language, they call it ajo, where you have community savings, where people contribute money, one person takes, and another person returns. What I'll tell you is that in an inflationary pressured economy, by the time it's your turn to get the money, what you are getting is not worth what you invested in the first instance. So you need to stay away from things like that. Any return any asset class that gives you return that is subpar, very much subpar inflation, you need to stay away from those asset classes. And of course, it is also important to warn that it's in times like this that people begin to get scammed. If it is too good, it sounds too good to be real, it's usually too good to be real. So those people that tell you, invest now and in 2 hours you get 40% return, you have to be careful about that. Do your due diligence. Be sure they are registered with the SEC. Be sure they are tradable securities on a registered exchange, all right? So I would say stay away from any asset class that is not giving you a return that is at the minimum over 20 to 25% return. Stay away from that. Where should you go? Look at the stock markets. Look at real estate. Look at fixed income.
Right. And definitely, if you're trying to play in that ajo market, definitely you hope that when it's your time to collect, maybe the naira has even strengthened more and inflation has come down so you can enjoy. But looking at countries like Switzerland, they say for every 80,000 people, there's a billionaire, in Switzerland, and it's the home of billionaires, at this time. Paint a picture for me how difficult it is right now to be a billionaire in Nigeria.
Well, Ladi, I think that you're still talking about how to be a billionaire. In my mind, I'm thinking of how difficult it is to keep your head above water,
right,
even at this point in time. As an entrepreneur who has to pay salaries or who have overheads at the end of every month, it is quite a challenge at this point in time. And so if you look at it, some of the things that are happening, you have spiraling inflation, you have issues with insecurity, you have issues with exchange rate, the forex crisis that we have. So if any of your inputs as a manufacturer is imported, already you are importing it at a rate where it's difficult to sell the end product. You have a situation where there is reducing purchasing power. So people are not even able to buy what they could buy. So the things that are being manufactured are just on the shelves and people are not able to afford. So for a corporate entity, there is more than double whammy. It's probably a triple or whammy that we have faced. As individuals and as families, people's take-home salaries can no longer get them home. There is increased cost of just buying necessities, consumables. There is reduced power in terms of your ability to earn. People talk about multiple streams of income. Most people can't even get a job. How much more multiple? So I dare say that it's trying times for us at this point in time in our economy. But this is a time that everybody should tighten their belt, change your habits. Anything that you can do without, please do without. And also we call upon the managers of our economy to deal with the issues that bedevil the economy. We need to have basic infrastructure. You need to have power. We need to have good roads. We need to have security. People must be able to move from the farm gates to the market gates without being waylaid. When we begin to do some of these things, maybe we'll begin to really see the light at the end of the tunnel.
All right, definitely hoping for that light at the end of the tunnel. Thank you so much for joining us, Mr. Sam Chidoka, MD CEO, Kairos Capital. Thank you.
My pleasure being here.
All right, we'll take a break now. When we come back, we head straight to the markets. To stay with us.
We live in an era of massive innovation.